I do. And when you think about revenge travel that everyone keeps referring to, Kelly, when you look at discretionary spending for a consumer, the needs versus wants, the top of the want list is always travel. So travel will always win out. As long as you have a job and the employment situation in the country has been great. So Expedia, I expect to still pop. If you look at what Seema said, a year ago, for a year ago performance, the stock was down 40%. So even though it's rallied pretty recently, we've seen analysts ratchet up their estimates, which is always a good sign as you lead into the print. So I think there's still a little more juice left in the tank for them.
All right, Seema, we appreciate it. We'll let you go. And a quick programming note, Expedia CEO Peter Kern will be on Tech Check tomorrow to discuss those results, 11 a.m. Eastern time. Don't miss it. We'll move on to Lyft. It's got a tough act to follow after Uber posted its strongest quarter ever, but the shares are already up 31% over the past month. Deirdre Bosa has the story here. Deirdre, man, that Uber earnings, by the way, with everything else going on that day, kind of flew under the radar, but wow, what a report.
It did, and that makes it even tougher for Lyft. You said it's up, more than 30% over the last month? Year to date, it's up some 50%, and that even beats Uber's performance. But remember, this is a stock trading at around $16 and change. That is about a fraction of what it went public at $72 a share. So it has fallen extremely far over the last few years. And really, there's concerns on the street that maybe it's losing market share to Uber. For example, just take the revenue expectations. It's expected to post revenue growth of 19%. How does that compare to Uber's revenue growth of more than 50% in the same quarter? So it's going to be really important to look at things like active rider, revenue per rider, to see if Lyft is charging customers more to kind of make up for maybe a driver supply problem and longer wait times. And finally, Kelly, this is a company that has not diversified in the same way that its competitor Uber has. It has no food delivery business, or not a substantial one to speak of.
True.
And it's gotten rid of a lot. So it does have bikes, though. How profitable is that? How big of a business does it make up? Not enough, most likely. And, Lyft did talk about a food delivery business a few years ago, but we haven't seen it really shape into something substantial.
Are these Grasso favorites here, Steve?
Well, I think Deirdre nailed it. The difference, though, is that Uber has outperformed on an ongoing basis. Lyft is still right around its pandemic low. So just in sympathy, a stock can be down and up in sympathy. Lyft has been up in sympathy with Uber knocking the cover off the ball. Best quarter, best margins. It's very hard act to follow, but never underestimate it's so bad it's good. I always want to be investing in the best of class. Best of class is Uber, Kelly. But if you look at the stock on a technical basis, you're above all its moving averages, although it is starting to roll over a little bit. You might get, that's why I say hold this one. You don't have to go out and buy it. I wouldn't be a buyer of it, but I'm afraid to say sell it ahead of earnings because you could get that relief pop.
All right, they will call that the yellow light. Not a red, not a green. And we'll move on. Deirdre, thank you very much. Let's turn to PayPal, whose earnings are out after the bell today, and investors want to see how they're handling a more challenging macro environment. Their payments volume was $337 billion last quarter, but with consumer spending seeing some headwinds, the question is whether that will fall as well. Plus, PayPal has had a tough time keeping up with competition. Apple, beta version of its buy now, pay later product yesterday. We saw obviously what happened with Affirm today. Cost-cutting measures as well, also top of mind. PayPal cut 7% of its global workforce just over a week ago. Steve, doing that a week before earnings can't have you feeling that positive, or maybe these are cuts that need to happen. What's your take on PayPal here?
Well, if you look at the entire space, every time you announce any type of cuts, the stock usually rallies. So maybe they were looking at that, Kelly. I don't know. But I invite you and everyone to examine that chart. Go back to October of 2021. Why is that relevant? Because they were interested in buying Pinterest. If you're interested in buying in Pinterest, then it makes the investor think that your core business is out of organic growth. You're out of growth ideas. The stock has not looked good since that interest in buying Pinterest. So we're looking at a stock that trades a fraction of what it was back then. It was $270, $280.
Sure.
This one, I also say hold. This also a yellow light. So bad it's good. But I'm the least positive out of those three stocks. Expedia, positive. Lyft, maybe. PayPal, I think you can maybe get a relief rally, but longer term, I think they're just out of growth ideas.
I like what you hinted there, that they showed their hand when they went for that Pinterest bid, that it made everyone go, wait a minute, if you think that's a good idea, maybe we have to think twice here. Steve, thank you so much. We appreciate all your time today. It's good to see you.